Do you know what unsecured debt is and how it can impact your financial health? Let's dive in. Unsecured debt is a type of loan or credit that isn't backed by an asset. This means that if you default, the lender can't immediately claim a piece of property or other asset as repayment. Common examples of unsecured debt include credit card debt, medical bills, utility bills, and student loans. Why does this matter? Well, since unsecured debt carries no collateral, it's inherently riskier for the lender. If you're unable to pay, they can't just seize your car or house to recoup their losses. To offset this risk, lenders typically charge higher interest rates for unsecured debt. This means you could end up paying significantly more over time. So it's essential to understand the ins and outs of unsecured debt, as it can greatly influence your financial health. Understanding unsecured debt is the first step to managing your financial health. Now you may wonder, what happens if you can't pay back unsecured debt? Well, the consequences can be quite severe. First off, when you default on your unsecured debt, the lender can hire a collection agency. This agency will relentlessly pursue you, trying to recover the money you owe. If the collection agency fails to collect the debt, the lender might choose to file a lawsuit against you. If they win, they could garnish your wages or seize your property. It's not a pleasant situation to be in. In some cases, the lender might write off the debt as a loss. While this may sound like a relief, it's not. This write-off will show up on your credit report and can significantly damage your credit score. And let's not forget the potential legal consequences. Being sued over a debt can lead to a court judgment, which can have long-lasting effects on your financial health. As you can see, failing to manage unsecured debt can lead to serious consequences. So, how can you effectively manage unsecured debt? This question often looms large in the minds of those grappling with financial instability. Let's unravel this together. A crucial strategy is prioritizing timely payments. This not only helps avoid late fees and increased interest rates, but also contributes to a healthy credit score. Remember, punctuality is paramount when dealing with debt. Next up, consider paying more than the minimum amount due. While it might seem convenient to stick to the lowest payment, doing so can elongate your debt timeline and amplify the interest you owe. Instead, if your finances allow, aim to pay a little extra each month. This strategy can save you a considerable amount in the long run and help you become debt-free more quickly. Another important strategy is to avoid unnecessary debt. This might sound obvious, but it's easy to fall into the trap of overspending, especially with credit cards. Be mindful of your spending habits and steer clear of debt for non-essential items. Creating a budget is also a key step in managing unsecured debt. This financial blueprint allows you to allocate resources effectively, ensuring your bills get paid while also setting aside money for savings and debt repayment. It's not just about creating a budget, though. The real magic happens when you stick to it. By adhering to these strategies, you can keep your unsecured debt under control. Embrace these methods, and you'll be on your way to a more secure financial future. But what if you're already struggling with unsecured debt? Is there help available? Absolutely. And that's where credit counseling comes into play. Credit counseling is a service designed to help consumers navigate their financial challenges, particularly those related to debt. Credit counselors are financial professionals who can help you create a personalized debt management plan. This plan can include strategies for paying off your debt, such as negotiating with lenders to lower interest rates or waive fees. In addition to creating a debt management plan, credit counselors also provide financial education. They can teach you how to budget, save, and make wise financial decisions, which can prevent future debt problems. Now let's talk about how unsecured debt impacts your credit scores. Each late or missed payment on an unsecured debt can lower your credit score. It's because credit scores are designed to reflect your creditworthiness, or how likely you are to repay borrowed money. The more reliable you are at making payments, the higher your score will be. However, it's not all doom and gloom. Managing your debt responsibly, even if it's unsecured, can improve your credit score over time. Making regular, on-time payments and keeping your credit utilization low are key factors in this improvement. Remember, it's never too late to take control of your financial health. Reach out for help if you need it and start improving your credit score today.